Thanks for coming back to another episode of Pitch It, a fintech conversation amongst founders, investors, and friends. I'm your host, Todd Anderson, Chief Content Officer at Fintech Nexus. And what we do is we take a peek behind the curtain. What motivates someone to start a company? How do investors make the right bet? What do accelerators do during and help enabling the process of growing your company? How do banks think of founders? Not to mention, we try to have some fun, and what you'll see is we'll also do some special episodes. We have some new features coming. So stick with us, and you'll get all you'll need to know about the fintech startup landscape. Pitch It is really a part of a larger podcast network here at Fintech Nexus. You can go to my colleague Peter, our co-founder and chairman, for Fintech One-on-One. You can subscribe to his feed, or we have our newest podcast by one of our writers, Isabel Castro, the Fintech Coffee Break. For everything produced by Fintech Nexus, you can check out Fintech Nexus Podcast, which is really our content fire hose. All shows, webinar replays, even in-person event content, not to mention our weekly news show. As always, we hope that you rate the show and write a review. I try to really take listener feedback seriously, and as it helps make the show better. You can also follow the podcast and all of our podcasts on the feed of your choice, whether it be Apple, Spotify, wherever you like to listen, or come directly to news.fintechnexus.com. Now, let's get on with the show. On today's episode, I'm joined by Christian Maynard-Philipp, founder and CEO at Pattern. Christian and I discussed Pattern's origin story, why Pattern is different from maybe some of the other investing apps that you might have heard of in the market, scalability and financial advisors, the investing education gap, and kind of where that sits today as more retail investors enter the markets and enter investing maybe for the first time. Her time in the public sector, she's worked at Treasury under the Obama administration and some other roles in the public sector. The best fundraising story I've ever heard, and much, much more. A couple of short PSAs before we get started. We're still accepting applications for Pitch It at Fintech Nexus USA. Just head to fintechnexus.com for the details. The link will be in the show notes. If you want to sponsor an episode, come on as a guest or sponsor one of our many digital or in-person offerings, just reach out anytime at Todd, T-O-D-D, at fintechnexus.com. Without further ado, Christian Maynard-Philipp, founder and CEO at Pattern. Enjoy the episode. Welcome to the podcast, Christian. How are you?
I'm well. How are you doing?
I'm doing well. So, I like to start off the show. If you can just give a little bit of a professional background, where have you been before starting the current venture, and tell us a little bit about yourself.
Yes. So thanks for having me on.
Of course.
But yes, started out at Treasury, actually under the Obama administration, working on consumer policy. From there, met my husband at a wedding on the West Coast, such is life. Landed in Oregon, that's where I'm from. From there, had to figure out, okay, I've been working on policy at Treasury. How do I transition to kind of a real life, if you will? Landed in wealth management, had a great time, learned a great deal, a great foundation for the rest of my career, but it wasn't quite the pace that I enjoy, put it that way. So from there, I reached out to a pre-product retirement savings app. This was really early days when there weren't a ton of kind of retirement savings apps. And they were building a retirement savings app for 1099 workers, which didn't really exist at the time. And I knew this space really well from Treasury. So anyhow, reached out to the CEO with a PowerPoint and said, hey, can we get coffee? Pitched my PowerPoint on all the things I would do to make his business, skyrocket, whatever. Anyhow, I talk to students all the time, side note, and I'm always like, shoot your shot because you never know.
Yep.
Anyhow, he hired me. I moved up to the COO and CCO role very quickly because I was the only one on the team with a kind of traditional financial background besides the founders. And that company launched, did well. It was called Vault, led by Randy Fernando, who's amazing, still a mentor of mine. And that company was acquired by Acorns. So went to Acorns, helped work on what is now the later product or the retirement product. From there, a company approached me, third-party technologies. Michael Giles led that company at the time, another great, amazing kind of CEO in the fintech space. Said, hey, we need a COO, CCO for our brokerage API company. Again, knew this space well because we had built Vault on one of the only brokerage API players in the space at the time and knew there was certainly room for competitors.
Mm-hmm.
Long story short, joined that company, and then Cash App or Square approached us maybe 6 months after I joined. They were looking for a broker-dealer fintech product to launch what is now Cash App Investing. So Square is an amazing organization. Went there, was part of a small C-suite team at Cash App, and ended up building, scaling, launching what is now Cash App Investing, which is, I believe, one of the fastest growing brokerage firms in the US. And then 2020 hit. My husband was finishing his medical fellowship in New York, and I was in Oregon. Wow. Working on Cash App Investing. He gives me a call. Hey, you got to get out here. There's some weird stuff going on. I don't know if you're going to be able to travel for much longer. I'm like, you're crazy. Well, I went up to New York with, a week's worth of clothes, thinking it would be a short visit. And long story short, was out there for much longer, and really saw that things were kind of starting to run on autopilot at Cash App Investing, and the world was crazy, and started to see what I saw as white space for what would eventually become Pattern. And really that is, everyone I knew was finally making some money and also preparing for big life events. Having your first kid, saving for a home, maybe some life lows as well, navigating a divorce, or maybe that's a high. But long story short, there really wasn't something in the market for the digital first kind of population that I knew really well. Mm-hmm. If you have a ton of money, in my humble opinion, you're probably not going to put it all with Acorns. Yeah. Hard to get a hold of someone, get that kind of next level of advice on really complex questions. So left Square or Block, whatever you want to call it, with some of my Square stock, started building a broker dealer from my couch in New York because I didn't have anything else to do.
Yep.
And built it so that we could underwrite alternative assets. And I saw that as a missing piece in kind of this next generation of wealth tech, a product I really wanted to use. And really the rest is history. But I would say the vision was really, there's white space between your Betterment, Acorns, Wealthfront, what have you, and your traditional financial advisor. There's more we can do with technology, but also we need that human in the loop. Yeah. And so that really laid the ground for Pattern.
Now, did you see yourself as being a founder one day? I mean, you've worked for a variety of founders. You've been in the kind of the startup founder ecosystem. Was that eventually something that were striving for, or is it the white space kind of through the story you just told us, you kind of found the white space and said, hey, I have the time now with COVID, and there's kind of this opportunity kind of fell to you?
No, not at all. I did not see myself as a founder. If anything, I would actually love to be someone doing all the work behind the scenes and never the face of anything. That would be my ideal scenario. I don't know if you're laughing because you feel similarly.
I mean, I'm not a founder, and I kind of like the ability to be behind the scenes a bit. Yeah. I sympathize certainly with that point of view.
I would also add that I didn't know any other women. I'm sure you've probably heard this before, especially in fintech. I'd never seen or at least not seen up close, another fintech founder that was a woman. So I think that representation, it was really hard to see yourself as kind of taking that lead. It felt like there was something that I couldn't articulate that was missing from my resume, but I, again, couldn't articulate what that was. But my moms are the best. It's
Yes,
like, hey, Christian, like you need to start this. What are you talking about? You have been operating and running compliance and what have you, and doing all this great work behind the scenes for these really successful, companies. Why not you?
Yeah.
So I now pay that forward. Side note, my side hustle, I tell people all the time, is convincing women to leave their really safe corporate jobs to basically start their own companies if they're losing sleep at night about an idea. It's kind of my metric.
So when coming to the idea, tell us a little bit more about what you're building at Pattern, and how ultimately how'd you come to the name Pattern?
Yes, came to the name through some amazing investors, 25 Madison, early at the table, and they helped us, quite frankly, do a ton of market research about what landed best. If it were up to me, it would be a terrible name. I bought a bunch of domains. Always fun to do. No, they're terrible. They're not visionary enough. And Pattern really gives us the flexibility to build a huge booming company over time and not just be, fixated around the investing piece, which is certainly our focus right now. In terms of Pattern and kind of what we've built to date, so it's invite only right now, but we're in the app and Google Play stores. Plug, shameless. But invite only. And really what we envision, but kind of where we're at right now, we provide premium kind of digital office tools in app, but we also match, we have a fun algorithm, everyone with a financial advisor that's a Pattern employee. And from there, you can either kind of self-start your financial goals, or you can reach out on demand via chat to your financial advisor immediately. Hey, I got this weird notice from the IRS. What can you tell me about this? Or how should I plan for this? The vision is really to be proactive and give folks proactive kind of tax savings advice over time, and the full kind of digital office suite over time, so that we're doing as much financial planning with technology as possible, but also kind of arming everyone with an AI augmented financial advisor.
Now, in your mind, is there an ideal customer in kind of what they look like in terms of how much they make and kind of what their profile might look like?
Yes, we've done a ton of research around this, and this kind of plays into our go-to-market strategy and customer acquisition strategy, but two thoughts that are a little bit separate. First, we actually position ourselves as an employee wellness benefit. Think that's in a crowded space, that's how we build trust. So we can partner with your employee and give them advice on how to save for retirement. If they're, feeling like, I need to get my debt under control, we can help assist them with a plan for that. So that is kind of the go-to-market strategy. In terms of folks, professional segments that are most excited about us, people in tech, people in finance. Interestingly, I hear often from folks, for instance, in private equity, like I understand my niche very, very well, but I don't know how to manage my holistic financial picture.
Interesting.
Physicians and attorneys.
Interesting. I wouldn't think financial people would be, I guess, you get so into what you do for a living that you don't necessarily think about your own financial situation as much as maybe your what your job might be.
And then I'd also add our implicit focus is, there's one thing that's different about me than maybe many of my colleagues in the kind of investing wealth tech space. And that is, I'm a woman. So it's really important to me that we get more women investing, kind of getting their financial house in order. We know that only 26% of women in the US invest. They hold about 70% of their assets in cash. So if we can seriously tap into women as a serious customer segment and really serve their needs, which we're doing a ton of research around right now, we see them as the opportunity hidden in plain sight, and that's our road to IPO.
Related to that, when it comes to, you mentioned, the Acorns piece, the Cash App
Mhm.
piece, what is, some of the stuff that's missing with the investment market? I mean, we had this whole time during COVID where we heard on, whether it be CNBC or if you read the Journal or something like that, of this retail, onslaught of, hey, all these people are now looking at investing in the markets. They either have this disposable, income from maybe the government that they want to put to work, that maybe that they received, or they're just not traveling and doing as many things, so they have maybe a little bit more disposable income to put to work. And so we've heard that there's this big retail push into the markets. What is still missing there today, that I know that you guys are obviously solving for some of that? But what is, maybe expand a little bit more on what that white space is in the market?
Yeah, I would say that kind of digital financial advisor, and really that is that next level of advice. So really getting not just your account for in TD or Cash App or Robinhood, where you're day trading or trading some stocks here and there that you like, but as folks make more money, their life becomes more complicated. More people perhaps are relying on them, maybe your kid, what have you. Um, your finances do become more complicated, and we want to be kind of the financial partner with folks and take some of that stress away from kind of life milestones and just living your best life, so that that financial piece can really be not stressful. Okay, can I answer that again?
Sure.
When you kind of forget what you're saying halfway through? I'm gonna take a swig of
I've done it
coffee.
many times. So yes, you can re-say that answer. So to the editor, ignore that answer. And so I guess, for the editor, the white space part, and then that can lead into the answer.
Okay, so what is the white space in the market? Okay.
Yeah.
So I would say white space in the market today, really that, again, space between kind of wealth tech 1.0 and your traditional financial advisor, and also kind of these asset classes and tools that millennials, et cetera, really want, that they might not traditionally get from a financial advisor. So for instance, some of the stats today tell us that millennials are digital first, but they're hiring financial advisors at the fastest rate of any other generation.
I wouldn't have thought that.
Yeah, me neither. But anyhow, so we are arming folks in app with on-demand access to, again, their matched financial advisor, which is very, I think, millennial of us, but really, as we talk to our customers, which I'm always doing, we're seeing is really meeting that need in the market of, I don't really want to go into the office and meet with a financial advisor. I don't really want to meet with my parents' financial advisor. I'm busy. I have a lot going on. I want someone on demand. I also don't want to pay a traditional financial advisor 1% to get ETFs that I could Google in the market.
Yeah.
That's not my pace. So really also bringing that exclusivity for why we charge, a fee for our services as well.
So now, do the financial advisors, are they actually working for Pattern, or are they a network of like independent financial advisors that are working through your network, and maybe working independently on themselves as well?
Yeah, great question. This was an early strategic decision, and we really decided we wanted financial advisors working for Pattern for a couple of reasons. One, we saw that some earlier players in the space kind of worked more as a lead gen kind of fintech app. And what we saw in interviewing customers and folks that had left some of those companies is that there was a really big issue with quality control when you're kind of, doling out those relationships, and also you don't have any oversight of the conversations and kind of how things are going.
Yeah.
So it was really important to keep that in-house and really lean into this vision of creating the best, whether it's through technology, a human layer experience possible to our customers. We want people to walk away and never feel frustrated, but feel, oh, I got my question answered, or they're going to come back to me and answer my question later, but that was a great experience, and they handled my finances and questions with care.
So then, you mentioned that that's the road to the IPO. So as you scale, does the financial advisor piece become, you know, almost non-scalable?
Yeah. So really leaning into that AI augmentation in a really smart, responsible way. I actually just had a call with our compliance advisors yesterday, and I have a long CCO background, but working with regulators on that piece to do it very responsibly as we scale and grow. But trying to, for instance, scale our financial advisors in a smart way whereby, maybe some really easy kind of underlying low-hanging fruit questions we respond to with some help from AI.
And then, you know, the a lot of people I know that either, whether it be my wife or others that kind of are interested in how they can grow their money, but the education gap is still
Yeah.
fairly large. With your background in the various investing related apps that you've worked with, I mean, where would you say the investing gap on the education side is today? How much has been improved by fintech? And I know you guys are obviously filling some of that gap with financial advisors and kind of connecting people to the right people. But overall, how big is the gap, would you say, today?
Yeah, I would say there's certainly still a gap. Fintech has made strides to really fill that gap. I also think that there has been, in some cases, an industry made out of making things sound more confusing than they are. I think financials and finances are more simple than most people would anticipate. Until you get into taxes, that's always complicated. At least in the
Yeah.
U.S. So there's certainly still some gaps. And another big piece is just meeting people where they are. So for instance, in our research with women, which we're partnering with some really amazing students at NYU, shout out to them, where they're doing just heads down research, customer discovery, just with our women customers. But something that we're seeing is that just that initial reach out where you sign up in the app, you're matched with a financial advisor. We're seeing that, and our sample size is smaller right now, but what we're seeing is that women are much less likely to reach out to their financial advisor than men, even if they say, hey, I have all these questions. So doing simple things like reaching out proactively after a woman is matched with, their financial advisor and saying, hey, how can we help you? We noticed that you said you are up every night thinking about how you're going to pay off your home in a timely manner and maybe retire early. Let's talk about that. And I think that's really the key, just meeting people where they are in a way that's approachable and not intimidating.
So you referenced earlier it's hard to vision yourself as a founder when there's not as many women founders in fintech in particular. Um, we hear all the time about fintech's quote unquote promise on delivering a more equitable and a more inclusive experience. You know, I mean, where are we on that mission? And you always see the stat of 2% of, I think, startups are women founded startups that get capital. I mean, how much more can be done to influence, either investors or users that, there needs to be more women in fintech and tech overall.
Yeah. I think that the stat that I referenced earlier is a really good indication of why we need more, female founders in fintech. So again, only 26% of women investing. For instance, apparently, if you look at Robinhood's customer stats, something around 95% of their customer base are men, which is great. I use Robinhood. I was an early user. I love Robinhood. I still
Yeah.
use it. But there's certainly more like room for more diversity, and that goes further than women founders in fintech.
And does a lot of it goes to even the language that a lot of these either apps or even financial firms use in their marketing and in the presentations and everything they present tends to speak more to men than it does women, and even in subtle ways that it's is most time overlooked by a lot of these companies.
It could be. Something else that we see in some of our research is, for instance, and this is kind of well known, but women are much less or much more risk averse than men are.
Oh yeah.
So kind of leaning into that piece and looking at Robinhood, it makes sense, right?
Yeah.
That would lean heavily towards kind of men customers or male customers.
Yeah, we're recording this on March 16th, and obviously the last 5 days has been quite interesting with the collapse of Silicon Valley Bank, Signature Bank, news this morning of First Republic and kind of their issues. As someone who's worked in the public space, you mentioned the Obama administration. You're also in fintech. I mean, do you have any thoughts on kind of what's been going on with the the banking crisis, I guess you can call it in some ways, and kind of just the way in which Silicon Valley kind of unraveled so quickly, which was kind of, I guess, the first Twitter bank run.
Twitter bankrupt. Oh my gosh. Wow, that's so
I mean,
good.
it took in 2008, I think it took Washington Mutual 8 days to lose 16 billion, and it took Silicon Valley Bank 24 hours to lose 42 billion in terms of deposits leaving.
I don't think that I could add anything else to this conversation that hasn't been said on Twitter. But what I will say, as someone with a strong compliance background,
Yeah.
diversify, diversify, diversify your deposits. I once managed money for an individual whose sadly his wife died, and he had no idea where any of his money was. But when we dug into it, his wife had put $250,000 across maybe 20 banks, and part of it was just pulling it all together. At the time, I was really early in my career. I thought, this is crazy. Is it crazy? I don't know. No, I wouldn't suggest that anyone puts their money across 20 banks, but diversifying is never a bad thing.
Well, I mean, as someone with a compliant background, I mean, you know, does a time like this and in the business that you're in with investing, do you need to do anything to then reassure people that their money is safe? Do you, as a business owner yourself, do you then take time back and go, all right, where is our capital? Where is our money? Should we be doing anything different? I mean, it does give a little bit of like self-reflection of, are we doing the right things? Should we be telling our customers different things?
Yeah. It's certainly an important inflection point, I would say, to make sure that we're doing all that we can to protect our business and make sure that it's, around for generations, but also making sure that our customers are confident in the service that they're getting from Pattern, and they're confident that they don't even have to think about, where their money is. So yes, I would say being transparent with customers and proactive in terms of communication is important at this time, or at least that's the way that I lead.
What is thus far? You've been, I think you launched in 2020, so almost 3 years now. Um, do you have a particular regret that you can share of the last 3 years that you've learned about your own company and kind of the own founded journey?
Yes. So, side note, so as a highly regulated business, because we have a broker dealer, a registered investment advisor, a transfer agent, a lot of kind of since 2020 has been building, getting those regulatory licenses and then building the product. We just now launched 2 months ago. However, I would say biggest regret, that's what you asked, correct?
Yep.
Is probably firing faster is probably what I would say.
And, hearing the way in which you describe the, how much time it takes to build the regulatory piece to it, is there sometimes a misnomer about fintech that there's a lot of loose, fast and loose with the rules, and that these companies are not building compliance and regulatory driven companies, that they get a bunch of venture capital money, they're trying to break things fast, but in the reality is a lot different than that.
I would say oftentimes it's very different from that. Sometimes it's not. For instance, you have kind of neobanking apps and banking apps, and the regulations behind both are very different. So for instance, most, prepaid cards, banking apps, those are neobanks. So the compliance is very different than, if you're opening an account with JP Morgan Chase. I will say in terms of securities, it's pretty, at least in my experience, cookie cutter, and that you need certain licenses in order to do certain things. And you can't really piggyback off of someone else's, license, etc. So in securities, for instance, when the whole FTX piece happened, I was very clear that, hey, this could not happen. We are regulated. We go through external financial audits. We are examined by several different kind of bodies of regulators. We're not in the same boat. We are absolutely kind of regulated differently. Like, this could not happen.
What's the biggest lesson that you've learned since founding the company?
Biggest lesson I've learned. That's so hard. There's so many. I learn new lessons every day.
or one that you want to share. Obviously, the firing faster was a regret, but maybe something more on the positive side.
Something on the positive side. Oh, that's so hard. I would say, there's always this healthy tension between gut instinct, data, and kind of your expertise knowledge base. And sometimes you just gotta lean into that gut instinct. And also, you don't always have the best answers. So I think everyone says this, but hire people that are smarter than you, but that are very, very passionate about what you're building, and the rest will kind of come together over time, as long as you're steering the ship in the right direction.
Well, speaking of team, how big is the team today? Where is everyone located, and kind of what's the makeup in terms of like engineers and whatnot?
Yes. So we have about 10 employees. We're all over the US. We're distributed first. And I've found that is one of the best ways to hire the best talent, most passionate individuals. And it's really fun on the kind of recruiting for financial advisor side, because we see people that traditionally are stuck in one geographical location, with a traditional wealth manager, now able to, move to be closer to their mom that's, getting older or what have you. So that's kind of been a fun part of building Pattern.
Have you raised investment capital? And if you have, kind of how was that process, and what'd you learn about the business when going through those pitches and talking to the investors?
Yeah. So, wild story. I
like wild stories.
Oh, so I started really kind of fundraising, hiring as I got pregnant with our now daughter. She's 15 months. And so, of course, things were really ramping up once I was very pregnant. I would say 8 months. And I'm like racing against the clock, trying to get things done. And, you know, so much of fundraising is momentum. And once you have that momentum, you just gotta close. So that being said, of course, the stress of fundraising, there's stress. So I ended up giving birth a month early in the middle of fundraising.
Wow.
I have women reach out to me all the time for, hey, you know, what's your advice? I'm doing this, I'm pregnant, blah, blah. Don't do what I did. Just don't do it. Because I had so much momentum. I was kind of on the, you know, end of the bell curve, just kind of starting to close things. And so I literally have pictures of me on Slack in my hospital bed. And I went back the next Monday to pitching. Didn't say anything about it, just, you know, continued those due diligence meetings. And it wasn't until later on when I shared with some of our, you know, investors that signed on, they're like, why didn't you tell us? Like, I hope that you felt comfortable to tell us, because we would totally have supported you. Like, that's not a, you know, a red check mark in our book. So that was nice to hear, but it's also when you're in the work mode, it's not always top of mind. And it's also like, are you supposed to mention it? Are you not? I don't know. I just had to get it done though, which we did. We closed it. It's a little painful.
That is a fascinating story, and certainly probably the best fundraising story I've heard. This is, I think, episode 85, so that I think that tops every other fundraising story. It's funny because my wife would probably yell at me, you know, because I was always the one on Slack. I know she's the one giving birth, but she would always tell me to stop working. In going through the fundraising process, I mean, you've obviously mentioned you know, the lack of diversity in fintech. I mean, was it at any point a barrier? Did you feel as if you know, investors were asking either, you know, different questions? I mean, how was the fundraising process? As we talked about, only 2% of venture-backed companies are women-founded companies. So how was that?
Yeah, I would say that it was overall not a terrible experience. Fundraising, you know, especially as an operator, you always want to be operating. It's much more fun.
Yeah.
You want to be kind of envisioning, moving things forward, spending all your time there. I'm prepping to fundraise now, and still it's like, oh, I gotta leave this off because really I need to get our deck done and actually, you know, move this forward. That being said, I had a mostly positive experience. I can say that there are a couple of questions that I know that if I'm asked, it's not going to happen. This is going to be our last meeting. Something about me is not going to work. But really, you don't want those people on your cap table anyhow.
Yeah.
I love our cap table. We have really, really incredible investors around the table that I can call and ask about, hey, I have XYZ going on with, you know, this employee. What do you all think? Or I'm looking to put an offer out. I have two great candidates. Can you interview one? Because you know, I don't know who the best candidate is, or I need another opinion.
Yeah.
Which is great. However, we need more women with big liquidity events too. We just do. I'm hoping that I will be one of them, you know, in the near future, or hopefully, you know, 5 to 10 years. But we need more women that are empowered to build their companies to a place where they're, you know, bringing in these huge liquidity events. And then I think you'll see more change, hopefully, around women getting funded.
And what piece of advice would you offer to another founder, women or man that might pick up the episode and listen?
It's going to be harder than you ever expected, but keep going. Because the highest highs and the lowest lows are there when you're a startup founder, but keep going, because just at the moment, and this is a famous quote, but it's true, you want to give up. There's always some sort of a breakthrough. So I say keep going. It's hard to do it.
We have just a couple minutes left, so I like to end a little bit lighter. Do you have a favorite book or the last book that you read? I see there's a nice collage of books behind you there, if that's real.
Oh my gosh, it actually is real.
I know some people have those fake book backgrounds to make them look smarter.
I actually get asked this quite a bit if this is a fake background. Okay, 2 books that I've read somewhat recently that are so good. Ride of a Lifetime, Bob Iger from Disney. So good. And I identified with so many things where he was like, I get sidetracked by perfectionism, etc. Really interesting to kind of hear his perspective. And he started out his career with several acquisitions. So I was like, oh yeah, I get that. And then I'd also say, oh, I can't see it from here, so I can't tell you the author, but Better Not Bitter, one of the individuals that was arrested and part of the Central Park Five. Just an incredible story about going through so much and so much injustice, but having the most, I would say, really inspiring perspective coming out of that situation where it's like, oh, this is, I felt it like on a spiritual level. I was like, okay, if this person went through this, I can go through this. This is his perspective is just, yeah, it was incredible.
What do you do to unwind and kind of step away? Obviously, founders always risk. You mentioned the fundraising story, but they always risk of burnout. How do you keep yourself kind of your mind free at times and keep yourself fresh for the team?
Yeah, so a couple of things. So 4:30 to 7, I always hang out with my daughter. I am offline. I get online like 7 to when I go to bed, but I always hang out with family, have family time, try to be really present, not even looking at my phone. And then I try to wake up early. This doesn't always happen, and do it like maybe a 15-minute workout and then some me kind of spiritual time. And not really, if I do all those things, I'm like set up to do really well for the day.
Do you have a favorite sport or sports teams that you root for?
No, but I love Serena Williams. She's retired though.
Yes, she is. It's funny. I mentioned this to people. There's a reason why I asked the question is probably 95% of founders don't watch like typical sports. And it
Yeah.
goes to, that the way in which they think it tends to be a little bit different, and you have to be a little different to be a founder.
Oh, interesting. Yeah, I can't remember the last time I watched a sporting event.
Favorite vacation spot?
Probably Paris. Lame answer, but oh man, I love that city.
And then final question, what inspires you?
Ooh, the people that I meet on my journey that need help with their finances. And I'm thinking about people in my inner circle, my mom, when she was maybe a younger mom and kind of getting situated after divorce and really could have used a tool like ours, where she's like, okay, how do I start? How do I do this? I'm going back to work, but I've never managed my finances before. But those people are really inspiring. And I would love to be a small part of their journey to help them, live their best lives.
Well, Christian, I appreciate you taking the time and coming on the show. If someone wanted to reach out, how would they do that? How would they find you, or how would they find Pattern?
They could reach out to me via email, christian@patternfi.com, or they can take a look at Pattern, request more information, get a demo if you're an employer, via our website, which is patternfi.com.
Well, thank you again, and best of luck to you and the team.
Thank you, you as well.
Thank you.